I'm Bertrand Nézet, Chief Market Intelligence Officer at Viridios AI. Viridios AI is a data intelligence platform for carbon markets, seeking to increase transparency. With today's webinar, we mark the launch of a new webinar series, a little different from the webinars we've been doing over the past few months. With the Viridios AI Academy, the intention will be to every time do a deep dive into a different part of our product, explore our product offering from a different angle. Today, for instance, we are going to be doing a deep dive in our analytics products, which was launched a month ago. And we'll explain a lot of, what it delivers, what it offers, how it works. And we are already lining up the next series of webinar, doing deep dives into other part of our application. I already see a lot of familiar faces connected, existing customer. I'm very pleased to see that. I also see a lot of new faces. Obviously, you'll all find this session informative. We are very keen to get a better understanding of what are your requirements, what are your needs in terms of analytics. So we've crafted a little poll with 6 questions. So we'll leave the poll open throughout the presentation. So you have 30 to 35 minutes to answer it. So, a big thank you for doing so. Katie, can I trouble you to launch the poll? And then, as usual, after the presentation, we'll also keep some time for questions. So you can log your questions with the Q&A function in Zoom. So don't hesitate, and we'll pick this up later. But without further ado, I'd like to introduce Luis Salles to this webinar. It's a great pleasure to have him on the webinar today. Luis is been working with me for months as part of the market intelligence team, mainly in the background. So here is this opportunity to speak with you and share his wisdom. Over to you, Luis.
Hi, Bertrand. Hi, everyone. I'm excited to present this analytic module that I have participated extensively in the design and in the development. A little bit about me. I'm a data scientist working at Viridios for 1.5 years. Previously, I had an experience in equity research for asset management in Brazil. And right after this, I did my master's degree in data science engineering, where I could start working with financial analysis, with my financial analysis background, to data-driven decisions and using some analytics tools and modeling process to help the transparency in this market. At Viridios, I work mainly in the market intelligence team, where you can find some insights and create the reports and give all of the validation and understanding better this market. Also, I work with some model development, and I'm really happy to be part of this team that has a significant impact to develop the transparency in this market and also the sustainability. And over to you, Bertrand. Thank you for...
Thank you very much, Luis. So let us get going. So So this is what we'll be talking about today. A couple of words on the context and background and what's the vision behind this analytics products that we launched a month ago. Luis is gonna share with us some of the details of the technology stack powering this product, and then we've launched already quite a number of dashboards. So we're not going to look at all of them, but we've handpicked a few which we thought are fairly interesting and easy to understand. And so we'll walk you through 5 of these dashboards for the voluntary carbon market, as well as one of them for our Australia offering. So you may have already seen this so-called DIKW pyramids, which it comes from the origin of who has popularized this pyramid is not clear, but it comes from the early 20th century from the knowledge management field, and so the idea is to explain how you turn data into information into knowledge, and finally knowledge into wisdom. So I just took a very small example, but to a bit illustrate. So an example in our market. So for instance, the raw data could be, this project 1, 2, 3, 4, 5 on Vera vintage 20. The price is 480. I can see that it's a so-called Devs 1 kind of price on the Viridios AI platform. I can see that it's been rated by a rating agency. It's got a AA, and in terms of co-benefits, the project delivers SDG 2, 1, 4, 13, and 14, which is biodiversity related. So that's raw data. Some data are all of this data is available on our platform. Some are public data coming straight from the registry, and some are data sets like pricing and rating, which are either crafted by ourselves or by our partners. Information, how do we so it's what is the meaning of this raw data? So what can we derive from that? So in this example, we can see that the project is liquid and it's been rated by a rating agency, and it also delivers number of co-benefits. Then what would be knowledge? So knowledge comes to put certain context around the information that we visualize. So in this case, there could be looking at the average price for the same vintage 2020 for similar project in sharing same project type, similar methodology, same jurisdiction, or at least similar region. So for instance, we say, this project price for that vintage is lower than the average price for similar projects. And we can also know that, for instance, only 5% of projects in that segment jurisdiction have the same rating or higher rating. And then I can also see, because we expose retirement data on our platform, we can see that the project has been massively, at this vintage, has been massively retired, and it's been retired by corporation ABC. And then moving up through this pyramid, wisdom would be, it's really when you apply information that you get and you action on it. So in this case, it could be, I've made a decision with all this context, and that we should, as a company, we should buy and we should invest in this carbon project. We should buy carbon credits, and potentially we should explore an offtake agreement with the project developers. So that's a very sort of toy example, but just to explain how raw data gets turned into wisdom, and that's a bit the guiding principles and what we've tried to achieve with the launch of this analytics product. So, you know, before we were showing a lot of data sets, but that was very presented really at the project level. So, you know, you go to the project page, you can see the credits, you can see the price by vintage, the eligibility, you can see similar projects, you can see the retirement information, but it's very much by project. So what we wanted to do with this analytics product is to offer number one, aggregation capabilities and visualization. So that's what you see on the right. I'm not going to go into the specifics of this chart. That's the purpose of these sessions. We are going to be presenting a lot of this chart. So now I just want to you know, brief you a little bit about the tech stacks that we put in place to power this product, this analytics product. Over to you, Luis.
Thank you, Bertrand. Here we are going to talk a little bit about the technology behind all these visualizations and this analytics module. Basically, what we have is Viridios AI has a database with all type of information from issuance, prices, vintage, project informations also. And for develop the module that we have now in the platform, we had two layers before to be able to offer this technology. So the first one is the BigQuery integration. BigQuery is a cloud-based data service from Google that works pretty well with large data sets and perform pretty well also. So for the amount of data that you have and also the kind of queries and joins that we need to work with in this project, it was the best solution that we could find. And another layer that we have to be able to present the insights and the analytics is the visualization layer, and we decide to use the metabase. After contemplate a diversity of products, we choose them for the visualization layer because it's really user-friendly and also perform really well in the platform. So after these two layers, we are able to present to you the information in our platform to help your strategic decisions and also generate fast queries and fast data performance for you. Over to you, Bertrand.
Great, thank you very much, Luis. So yeah, enough with the slides. Let us start looking at the platform, which is why we're here today. So give me a second. Is this well positioned? Yeah, more or less. So we're going to be starting. So as you can see, you know, navigation bar for existing customers, you're already familiar. So, you know, we have projects, market news, valuation, prices. Today, we are going to be focusing everything under the analytics. So very easy to access in the second icon on the navigation bar. We'll start with, so you can see that you've got voluntary and Australia. We'll start with looking at a couple of the dashboard for the voluntary carbon markets. And we'll start with the overview. So a number of things that, let me refresh that. Yeah, here we go. So, okay, so by default, it's showing data and prices for the last 24 months. But, you know, just bear in mind that this can be changed, and we'll look at this later. So by default, it's showing you a couple of things, showing you the number of projects in scope, so 17,491 projects across 5 registries. So we've got VERA, Gold Standard, we've got the Climate Action Reserve, as well as the American Carbon Registry and CDM, which is a clean development mechanism. So we've got these 5, and we're working hard on adding a couple of registries in the coming months to to complete the picture of international credits. It shows you lowest price, highest price. It may sound like a huge range. Bear in mind that we are talking about here all the vintages available on the platform. So right now we publish prices for vintage between 2010 and 25. In a couple of weeks we are going to be extending future vintage up to 2030. So that's coming, and then as it gets released, it's going to be naturally included in this analytics product. So we see a time series for the last 24 months, separated by vintage. The general trend for the last 24 months is a downtrend, and no big surprise there. Also, it's since, let's say, December, January 24, we may and I know a few of us have said that in the past, but we may have reached a bottom, and we, at least for number of project type, we do see a bit of a bounce back. So finger crossed on that. We've got a few maps that shows on the left the project counts by country. Not very surprising. The big countries are China, India, very big on renewable projects, but not only. And then we've got obviously the US, Brazil, and worth noting Turkey also, that is very present in the renewable space. On the right hand side, the world map is by project prices. So you can see which countries have on average higher price or lower price. This Niger, so Niger seems to be like the highest price, so it piqued my interest. So I was looking at this morning. It's merely because there's not many projects in Niger. There's 3 ARR, afforestation, reforestation projects, and that's it. So it's so on average it seems very high, but it's it's not very statistically significant. But otherwise, jurisdiction commanding high price in general would be Canada, US, Australia, and again, bear in mind that these are, I don't really like doing that, so later we'll do further filtering, but this is across all vintages, so it's maybe a bit difficult to appreciate. Then we've got a couple of bar charts that split project prices. So let's do that so that we get a better picture. So we can here select only one vintage. I think we're going to get more meaningful prices. So you can see that when you select only one vintage already, the number of projects drops down. That's because some of the projects we have in the platform, have not, either they have not issued yet a vintage 2020, or the project is, has started, but the crediting start, or the crediting period is post 2020. So here, so I was saying average price per segment. So the segment is how we call a bit, the different sort of markets or sub-markets, should I say, in the international market. If you want more understanding of what constitutes this segment, we have on on our knowledge base, you go to analytics, you go to segment here, we have, a definition of what project types, what exact activity constitutes. So types and activity are the two sort of cornerstone of our project taxonomy. And so how do we define this segment? We also show an average price by standard. So we've got the 5 standards we talked about. We've also got time series by region. We've got time series by standard. Worth noting that ACR and CAR have a clearly more pronounced uptrend since, I would say, November 23, and it's an interesting fact to seems, and a lot of these projects are in North America, so that seems to be sort of commanding a price premium. Then we've got number of project count, percentage and project count by standard as well as by segment to understand. So that's, in a nutshell, what the overview dashboard delivers. I'm not going to show all the filtering, but, bear in mind that, for instance, something that can be very meaningful is to look at a certain segment. So we can say, okay, let's take a look at just Red Plus project. So in this case, the project count, the lowest, the highest price, and then the time series, 24 months rolling time series that we display here is for Red Plus projects. Then we can also see their geographical distribution. So, we've got typically Southeast Asia, Cambodia, Indonesia. We've got, Congo region in sub-Saharan Africa, and then we've got obviously Peru, Colombia, Brazil, obviously, and a bit of Bolivia as well, to a lesser extent. So what else? You can also further slice and dice by region, by sub-regions. You want to estimate an average of, a certain specs. So a certain jurisdiction, a certain segment, you can do that in real time. So this is very, very powerful. And I've already spoken too much, so over to you, Luis, for the next dashboard. And I've just given you access to my screen. Over to you. Do you have it?
I'm trying to get it.
Okay. Yeah, here you go. I had to approve it. Yeah. Sorry for that.
Thank you. Going forward, we are going to look at the carbon credits dashboard. The main idea of this dashboard is to understand the supply and the demand in the market. So we have here the information about the issuance and the retirements of the carbon credits. And we have the same 5 registries that Bertrand explained in the overview. So the American Carbon Registry, the Carbon Action Reserve, VARA, Gold Standard, and the CDM, the Clean Development Mechanism. We in this carbon credits dashboard basically have the top information about the retirements and the issuance, and then we drill down, we slice and dice in each country, in the top projects, and also we can see some evolution visualizations. So here we can see the total issued, the total retired here we have also the map where you can find where we have the most issuance during the period that we consider. So explaining the filters, we have a date filter that for issuance consider the issuance date, and the retirements consider the termination date of these credits. Also the vintage, the geography, the segments, and also the standards. Going down, we can see also the top 5 projects by issuance, and drill down to see the issuance by standard, by vintage, and by segment. So for example, we are considering here just for the explainability since 2022, a small time frame, but that we can understand a little bit the market dynamics in the last 3 years. So we can see that VCS Vera has the most issuance during this period, and we can see also by vintage. So we have the last 3 years having almost 50% of the participation. Also by segment, and we can see the renewables being the most issued group of projects. Another thing that we can see is that when we hover the chart, we are able to see the total and understand the minimal details about the numbers for each category. Going down, we have this also by retirements, and then we can compare the participation, the share of each one of the groups, in this case, standard, vintage, and segment during these 2 years. The top 5 projects retirements is the next visualization that we have. So we can see the projects that had the most retirements since 2022. And we can have a storyline about the evolution of this market and understand a little bit deeper how the segments are being issued and retired. So over these 2 charts, we can see the evolution by quarter. We decided to use quarter as a good granularity to be able to understand the market dynamics. So over a week, we were going to have a lot of not that meaningful data somehow. And here we can see a little bit of renewables being really pretty much the biggest group of projects, but we can see the evolution by quarter. So at the beginning, we can see a huge part of the projects, like more than 55% of the issuance being from renewables. And right now we have this number going to 30% in the last quarter of 2023. Also by standard, we can see the evolution, Vera being the first, the top issuer registry in the whole time, but also seeing some evolution of the CDM. So you can see that the participation of CDM credits going down over time, also by the retirements. And here we have a really good comparison to understand the market supply and demand in the last 2 years. So from the supply side, we can see that this year we had less credits issued comparing with the other 2 years, so 2023 and 2022. But on the other hand, we can see the retirements. So over this year, we had a massive credits retired in January, almost the same number as 2022, and are recovering since 2023. And in February, we had a little bit less than last year, but last year we can see as an outlier comparing with the previous years. We can also understand the evolution of these carbon credits retirements. So from December, we can see that December last year, we had the highest number of retirements in the whole time. And we can also see other years if we want in this chart. changing here the filter. We can put just the last 12 months and see how the market had worked. And if you want also, we can do it for a longer frame. So for example, after 2019, and then we can see also the market dynamics since then and compare with what we have right now. So we are going to have more columns also in this chart. And it's a pretty interesting view to understand the dynamics in the since 2019. Now over to you, Bertrand.
Yeah, thank you, Luis. Let me. How do I? Okay, I need to recover. Okay, so now we're going to be talking about this dashboard that we call market value. I'm not a big fan of the name, but essentially what this dashboard shows is the outstanding market value and the surplus. So let's talk a bit about methodology and how these things are calculated. So what we do is we look at all the projects which we have in our project database, and we essentially we start by calculating the surplus. So for every project, for every vintage, we look at what was the quantity of credits issued and what was the quantity retired. And so we do issued minus retired in a nutshell, and that's giving us sort of the free float or the what we call the surplus. And then, so that gives us a quantity. And then, because we can, because we compute pricing or prices for the full vintage curve from, you know, as early as 2010 all the way to 25, then we are actually able to sort of mark to market, if you want, this surplus quantity. And so we are able to turn that and translate that into dollar value. So this is these two information that we present in this dashboard is surplus quantity and then outstanding value free float, if you want, in dollar amount. So it's quite informative. So for instance, we can see that you know, in terms of values, we've got still gases abatement and renewable energy, you know, accounting for the biggest part. So both combined, we're talking about roughly 2 billion. And that's not surprising. These are historically there were a lot of this type of projects. But then in the you know, for I'd say 6 to 7 years, we've seen a huge boost in the development of RED plus projects. And so that is catching up. That's quite important. And then slightly more recently, maybe 4 to 5 years, a big development into so these are the bigger categories that I put here, household devices, but mainly the improved cook stove, the solar powered cook stove. And so we can see that in terms of, it's quite interesting in terms of dollar value, it's not that far from RED plus. We show also this graph is showing the top vintage in dollar amount at the segment slash the segment that we've seen earlier, segment slash vintage. So we can see that the first three are household device, 23, 22, 21, and then red, and then finally, you know, 2018 renewable energy come in 6th position. And then finally, this graph is quite interesting. So it's a form of a scatter plot. So on the x-axis, we've got the segments, On the y-axis, we've got the different vintages, and then the size of the dot, so to speak, illustrate the quantity that of outstanding credits. So remember, issued minus retired. So we can see some trends. So we can see that in terms of surplus, the peak of gases abatement and renewable energy is in the past. I'd say that for gases abatement, maybe the peak was around 2013, 2014. And then we see trends developing, right? So red is keep increasing and keep getting bigger in terms of surplus available. Same story goes for household devices. So don't look at the latest vintage. It doesn't really mean that 23 that we see less issuance or a smaller surplus for vintage 23. It's just that there's a bit of a lag, and a lot of the issuance for 23 have not happened yet in the in the various registries. Then finally, we can look at this. The dollar amount of this outstanding value by segments. So again, we see gases abatement and renewable energy, but we see that it's actually, so we see issued versus retired here. So it's not it's in quantity, not in dollar amount here. And so we see that actually only a very small portion of gases abatement have been retired. So that's big surplus, which the situation is a bit different when we look at red plus and household devices. We see a higher percentage of credits being retired. Interesting to see that ARR, blue carbon is still very small, but ARR is and IFM are two very popular project type at the moment, and it's well reflected in this dashboard. Now we are quickly gonna look at another dashboard so here it's looking at eligibilities. It's a bit of a complex one, so I'm not going to explain everything, but what we mean with, in our jargon, what we mean with eligibilities are sort of the labels that can be tagged or that can be attached to a carbon project vintage. So for instance, we've got the eligibility that we have the SDGO, NGO, CGO, GO. We have the CORSIA, the pilot phase so far, and we've recently added Article 6.2 eligibility. So we've got and we've got three kinds. So we've got the Article 6.2 NDC. So when the project can actually ask the authorization to be used for and to be accounted as part of the NDC. IM stands for international mitigation. So that would be usage of saying that the carbon credits can be used outside for other program outside the Paris Agreement, for instance, CORSIA. Which is the very famous aviation scheme, and then Article 6 other, that would be other usage, and so we've distinguished these things. These various dashboards are showing the sort of cheapest to deliver by vintage. So for instance, NGO, unsurprisingly, we see that the mid price, the minimum or the cheaper to deliver is a vintage 18 because since 1st of July 23 last year, the vintage rule has changed for the NGO contract. So it stipulates that it accepts only projects from vintage 18 to all the way to 22. That's also why when we go to NGO, we under the 23, we don't see a bar for NGO. And, you know, and same goes for Article 6. So we show here, you know, what is the cheapest to deliver, or what is for vintage 21 in this case, what is the minimum price of credits eligible to Article 6.2. And then for vintage 22, that is at nearly $6. And then finally for article for vintage 23, we've got 666. So again, this is the cheapest. This is the price of the cheapest credit that meets this eligibility criteria. So if you go and explore on our platform, you'll see that quite a few projects which are eligible to Article 6 we can observe much higher prices than this. So this is sort of catching a project that hasn't really attracted a premium, even so it's Article 6, you know, eligible. So that may be, I don't know, we would have to look into it, but that may be an interesting investment thesis. We are running out of time. Maybe, yeah, over to you, Luis. Let's cover the rating Australia, and then let's take a couple of questions. You should have the control now.
Bertrand. Okay. Let's go now to the project ratings dashboard. Here in this dashboard, we have some data also from some partners that we have, some rating agencies, B0 and Silvera. Basically, we have the information from B0 in the rating. That's a letterhead rating, and Silvera we have a tier rating. Down. At total, we have 486 projects that contains ratings from either B0 or Silvera, and we can see here the project distribution by average price in the charts that we represent. An important information is the tiers from Silvera. The tier 3 represents the projects from C and D ratings. The tier 2 is triple B until B, and tier 1 is triple A to A. Also, we can see here the project count by segment for both rating agencies, and also how it's distributed by standard. So we can see that most of the projects that contain ratings are from Vera. And here in the scatter plots, we can see first the B0 and the second one, the Silvera. To explain a little bit deeper these visualizations, what you can see is in the x-axis, each one of the ratings, and we can see also the average price in the y-axis. Important thing also is that the size of each circle, each dot, is different and is related with the number of projects that we have in each one. So, for example, at triple B, we have 52 projects, and the average price is $7. The same thing for the Silvera tier, and we can always filter also by B0 rating and Silvera rating. So, for example, we can see here the AA. projects. The AA projects, we can see here 5 projects for at $16. And here we can see the segments, ARR, avoided conservation and conversion, and blue carbon, for example. And another thing that's really interesting is that the vintage doesn't change the number of projects most of the time, but actually what we have here is that we change the average price. So for example, here we are taking all of the projects B at average price of $5, yeah. And then changing the vintage, we are going to have, for example, just vintage 2024, probably a higher price for the same group, even that we have the same number of projects. So now we have $9 as the average price. An interesting thing also to see here is that, let me remove this, is that project count by segment. Most of the projects are renewable energy, but also in the market, you can see a lot of projects like this. And after this, ARR, RED, and GA projects. As we are out of time, I'm going to pass now to Australia, to our Australia report dashboards. And yeah. So going a little bit about the Australian market, we have 2 dashboards for this market. It's quite different, the market that we are going to show here. The segments, we have 15 different segments, not the same as the VCM, and for 2,000 projects. We can see also the ACCUs, that's the carbon credits in this market. The top 3 states, so New South Wales, where most of the population is in Australia, Queensland, and also Victoria. And we also have the count of projects by segment and by state. So we can see here the number of projects. Most of them are in New South Wales. Then after we have Queensland and also Western Australia. What's interesting is to see that the number of issued credits is different it doesn't follow exactly the places that you have the most projects. An interesting thing about this dashboard also is that we just present the supply side. We still don't have the retirement information on this from the Australian carbon market. And we can see basically the ACCUs issued during the whole time by vintage also. Here we can see each one of the vintage from Australian market. And then we can see how many issued credits we have for each one. The main type of project, the main segment right now that we have in the Australian market is the HIR, human-induced regeneration. Even that this type of this segment is not going to be following the same methodology in the next in the forward period. And actually we until now used to be the most used type of projects, issued type of projects. And some projects by segment, we can see here also how we split this market. We have two filters, 3 filters. That's the segment, the project type, and the state. But over to you, Bertrand. Thank you.
Yeah, sorry for cutting you off. We are really out of time, but thanks very much. Just to add on, we are planning in a month or two, planning to launch a new product with project level details for the Australia market. So be sure that once we have more data, these dashboards and this offering on the analytics product will be expanded. In the interest of time, let's keep the poll results. we'll summarize our findings in the summary articles that we will publish. Yeah, let's jump to the questions. Katie, do we have any questions from the audience?
Yes. Okay. So the first question, is there a way to get a list of the projects that are included in the total project count?
Yeah, excellent question. And I think in the we've got this feedback a few times. So at the moment, long story short, at the moment it is not, but we are working on adding this feature. Yeah. So a bit everywhere you are going to be able to drill down and get a list of project and prices that that constitute certain charts and averages. So yeah, very much in our pipeline.
Great, thank you. The next question, does the dashboard cover all carbon credit types and methodologies, and also how often is the data refreshed?
Oh, that's an excellent question. So it's covering every project that we cover on the platform. We've even included the carbon capture, the CCUS project. We've amended our project taxonomy to cater for this project recently, and that's with the intent to add registry which have a better coverage of this carbon removal project in the near future. So I would say that with the exception of this CCUS, we've got a very good coverage of projects for the sort of legacy registry, VERA gold standard, ACR, CAR, and CDM. So as the refresh time, so the data, and it's mostly really the price that is changed from day to day. It's refreshed daily at midnight or 11:30 p.m. US time, Eastern.
Perfect. Okay, so the next question, where are you getting the pricing data from, and how are you making sure that it is reliable?
Well, that's a question that we get a lot. So how let's face it, it's a very liquid market. However, we've built a connection with participants, across the market, upstream, downstream. So there's a lot of interdealer brokers. There's a lot of dealer brokers. We have corporations which are buying credits and are sharing their purchase price with us. We have project developers also sharing data with us. Yeah, that's the bulk of it. And how do we make sure it's accurate? Obviously, a project for which we receive no market indication, it's gonna be very hard. And so we've developed a proxy methodology to be able to compute a price using similar projects with prices for this project. So, but that's a very specific part of the prices we compute. A large part of the project prices we compute is based on market indications, so bids, offers, traded price that we receive. And on the reliability, I would say that it's as good as it gets, right? We combine multiple sources, multiple brokers, multiple corporation project developers to try to get a 360 view of pricing. And sometimes people will tell us, this price is too high, or it's too low, and that in general our usual answer is like, okay, so but if you have better data, so let's let's share the data where we have agreements for we give rebate on our platform for people who are heavily contributing to our data. So it's a data play. So the more data that we get, and we keep expanding every month our data sources, and that's how we get more reliable pricing information in the end.
Perfect. Thank you. I think we have time for two more. Are over-the-counter transactions also part of your calculations? How are you making sure that the data is accurate from these kind of transactions?
So, quite the contrary. In fact, I'd say I can't really quantify it, but so obviously we do take into account, certain prices observed on certain exchange. But as there are not a lot of trading activities happening out there, and till date, a large part of the action of the trades are happening OTC, be it on the secondary market for credits which are already issued, or even even harder to assess are like pre-issuance prices, offtake agreements, which are for credits which are not yet issued. So OTC are part of our data sets and the inputs that we use in our pricing methodology. And in fact, they account for, the vast majority of the prices that we get. How do we make sure that they are accurate? We've built extensive piece of technology as well as a data operation team that is, that has experience that's coming from fixed income pricing experience. I've been doing that for years. We've got a very robust, data cleaning, data outlier detection technology and processes. And that's how we do our best to deliver best-in-class pricing for carbon credits.
Perfect, thank you. Okay, so last question. Can I compare projects based on price, vintage, ratings, etc.?
Yeah, that's a good question. So that's let me just share this very briefly. So that wouldn't be in the analytics module, but for people who are familiar with the platforms, they can you open a project, for instance, and we've got this very cool feature which we call in the top right here, compare project. So here I've got Kyocera, and let us say that I want to compare that to, I don't know, for instance, Rimba Raya, and then I can actually compare side by side the project, how we have our nomenclature, our taxonomy of projects, what is the activity, what is the project type, what is the estimated credits issuance on a yearly basis, what is the methodology, and then we can also go at the vintage level where we can see prices, and we can compare, we can see how the spread for a certain vintage behaves over time, and so on and so on. So, hope this answers the question. We are running out of time. I think there may be a couple of questions that we didn't have the time to attend, but we'll reach out to you individually and provide you with the answers. It was a pleasure to have you with us today. Stay tuned. There'll be like I said, it's the first event of this webinar VAI Academy series. There'll be more exploring other part of our product. If you want to continue the conversation, reach out to Luis and myself on LinkedIn. We're always happy to have a conversation. Take care and stay tuned, and speak to you soon. All right.